Mike Swanson, Wall Street Window here. Well, Michael Burry has gotten off the stock market rally. According to filings he's had to make, he runs a hedge fund. He's got to file his positions every quarter. He's liquidated his entire portfolio except for one stock. And it's only a $3 million position for him. So he's gotten off the stock market rally. This is him. If you don't know, he's the character that was in the Big Short movie and made billions shorting subprime mortgages, and that made him famous. People follow his market moves. Now, he's been bearish overall on the financial markets, and he made some big warnings last year in the first half of the year that the market would roll over and there'd be big troubles to come. But at times he's gone long too, and he has been long on this market rally, owning stuff like Apple. And I'll show you what he sold, and I'll show you the stock that he is holding on to as his one solo position. Then we'll figure out is he right or wrong to get off this market rally as he's done. Well, let's look at the. This is the one stock that he still owns, GeoCorp. It's a prison company. And when he released the filing Monday, people saw it and they soared in to buy it. So just the news that he's an owner of it triggered a lot of people to follow suit. But here's what he sold. Apple was making up 17% of his portfolio, almost 18%, liquidated the entire position. Bristol Myers liquidated, Brook Holdings liquidated, Discovery liquidated, Google liquidation, Cigna liquidated, Meta liquidation, Oventive liquidation, and Nexstar Broadcasting liquidation. So he was playing some of the popular tech stocks, the leaders of the past couple of years, the Apples, the Googles, and Meta. But he's out. He's not a believer, obviously, in the stock market rally that we're going through, or else he would still be holding on. Now, as I said, he has been someone that trades. This is his reported value of the portfolio and how it's changed over the years. Basically, at times he'll have very little money at work, and at other times a huge amount of money at work. And now he's basically gone back to having almost nothing. So you can see what kind of happened here. From 2016 to 2018, it's pretty much in cash out of the market. And then after the market, and then he started to get back a little bit in December 2018. If you remember, the stock market went through a 20% correction. So he used that to start to get back in. And then when the stock market had crashed in March 2020 with the lockdowns, with the shutdowns, then he started to get back in a big way, up to close to $400 million worth of stocks. And then the portfolio grew and reached over $1 billion. And he then began to liquidate in the second half of last year. And now and sometimes he had some short positions and puts and this sort of thing, hedges. But now he is essentially returned to essentially a cash position. And this is not that shocking because he's made several tweets mocking the speculation in the stock market, making warnings of one sort or the other. So he is doing with his money what he has been warning people about with his tweets. He openly mocked the Magic Empire stock rise of the past 2 weeks, even though it's risen up to be one of the most popular stocks to trade among people because it's had a lot of volatility in it. But is he right? Is he right is the real important question for you and me to be getting this, bearish on the market and doubtful about this market rally. Well, let's look at the S&P 500 right now. So it fell, into June, and then it's rallied back up to roughly right around 4,300 as I'm doing this video. It essentially has rallied back up into its 200-day moving average. While being below it for most of the year, it's now rallied back up into it. Now, people say, I don't think it's useful. You'll hear this in financial media. Oh, a bear market's when the stock market's down 20%. And then when it gets back above being down 20%, you're in a bull market. That's pretty useless because once you're down that much or the market's down that much, it's kind of silly to say, oh, now it's a bear market after I've lost 20% of my money. It's more important to analyze the price trend of the market in a bear and bull cycle or long-term cycles. And in between, you get tops and bottoming processes that can take months, sometimes a year to actually play out. Though those long-term tops and bottoms, especially bottoms, are much more rare. So when it comes to that, I use simple stage analysis. It's a technical analysis philosophy where you look at, instead of the day-to-day price action, you look at how the long-term 200-day and 150-day moving averages are trending. So when they're going sideways after a substantial decline, you're in a stage one basing phase. In a stage two bull market, the moving averages slope up and the price of the market trades above those moving averages. And typically we'll test those moving averages once or twice a year for a great buying opportunity. Now, in a bear market, it goes below those moving averages, and then you'll get a rally back to them, which is resistance. And if the market can't sustain a big rally after that, then it will roll over and continue to decline. So with that in mind, in my way of seeing these things, the market has been in a bear market since it peaked out in January and is now having a counter trend rally back up into those critical long-term moving averages. It hasn't, broken through it in a meaningful way. It can get back above it, and it could very well trade around the moving average or above it slightly for several weeks before we can determine whether this is really going into a bull market or simply rolling back over. That won't be something we may not know till the second half of September, or I should say. But I'm also very skeptical that, just because the market is up to this level, we should get all excited. And I know people are saying, oh, the Fed's going to pivot and this and that, but that's not backed up in the bond market. And the same people are saying that inflation was transitory a year ago, and then obviously that was wrong, and it's led to much of the problems we've been seeing all year. So is he too late to get off? Well, I don't think the market is going to drop immediately right here. So I would say he is early getting off of this rally. I do think the rally can run some more. It's just we'll have to see if this is for real or not. We probably won't be able to determine that for several weeks. But I think he did get off early on the rally. That I do think. But is that a mistake for him to have done that? Not necessarily, because it's actually impossible to time the exact day or price point that a rally ends at. So for someone who's got that massive amount of money at work in the markets, getting out early makes sense to me, because if you were to try to get out later, and do mass selling of hundreds of millions of dollars, that could be a very difficult situation. You don't want to be selling on the downside such massive positions when you're selling could, in fact, that big could influence some of the stocks. So, I think for him, he's probably, I'm not doubting what he's doing, but what I'm seeing is individual traders in the market that are playing this rally. They seem to be short-term orientated based on the stocks that have been going up the most. So when we look at the market today, the Best Buy is one of the top gainers of the day, and the Magel stock was the play of last week. So this is reminiscent, these meme stocks. This type of meme stock trading is basically done by short-term day traders. These aren't people that are buying these stocks for the most part thinking, oh, I'm going to hold these for a long-term investment. They are in for the short-term swings, day trading or trading over a couple-day period. And short covering is being influenced, much like the first quarter of 2021. So it's an interesting moment we're in. I think these the money will probably rotate into some other meme plays, and this sort of process type of trading could last for the rest of this month. So interesting times this market. I want to tell you what Michael Burry was doing. It's always interesting to see what he is doing in the markets. Now, let me tell you this. I personally am not a meme stock trader or a day trader. I find it hard to try to trade based on one day's price action. I find that difficult to do. But I have a stock trading pattern that, look, I've been trading since the 1990s, and this is the single most consistent pattern I've ever used. It provides a good entry point with the most upside. And I did a video about this pattern, I think it was 2 weeks ago. I call it the twofold formula. I will link to that video in the description of this video. And I recommend that you go to that and watch that video. In that video, there's also an entire PDF book that's free in the description of that video, so you can even read about it and see the examples, and actually, just as important, understand why the pattern works. So always be learning in the markets. Now, I do videos about all sorts of topics: the economy, real estate, news topics, history topics. Got lots of interest. If you want more stock market information from me, hit the like button. I'm there to make more videos like this. And if you're new to me on YouTube, hit the subscribe button, hit the bell, and then YouTube will send you an alert as soon as the next video is up for you to watch, and be talking with you later.